Many steps have been taken in the aftermath of the economic and financial crisis. The biggest change will see a banking union and, very importantly, a single resolution mechanism to control banks. But will the new structure be enough? We asked British MEP Sharon Bowles.
Je ne comprends pas très bien comment vous avez pu accepter un accord de résolution bancaire dont tout le monde sait aujourd'hui que ça ne marchera pas. Il y a le problème de la gouvernance qui est beaucoup trop complexe. Il y a aussi l'insuffisance des ressources qui auront comme effet qu'en fait, s'il y a une nouvelle crise bancaire, ce seront à nouveau les gouvernements qui devront intervenir.
It will not work. This is at least what the gentleman, a professor, is telling you.
I don't think that it's as bad as he says. We cannot actually have the kind of system that we would like that would work under the existing treaties. So we can't go to what would be the perfect solution probably for everybody without a treaty amendment, so that waits for the future. The system that we have got is very much streamlined from the proposals that the Council were making. The decisions can be made in a weekend. Most of the decisions are made by the Single Resolution Board. If they don't agree, because they have on it the various different representatives from different member states' resolution boards, then the 4 permanent members make the decision. And on a few occasions, when there's big use of a fund, then yes, there is an extra layer, but it's not that complicated.
So it just means what you say here, there is no new banking catastrophe possible at all when I listen to you.
I didn't say there's no new banking catastrophe possible at all. I'm sure there will be some banking catastrophe.
The big question was a question of control, but where at the end will be the political control?
Usually what has happened is examined in retrospect, and I imagine that that process will be exactly the same. If need be, there would be parliamentary inquiries. If need be, there would be parliamentary inquiries in affected member states.
Let's go to the next question. Also, you're on a bit the same issue, of course.
80% of the European economy is being financed by banks. New regulation was necessary to make the banking system more safe. Have we found the right balance? And is all new regulation not going to come at an extra cost to the economy and to the society?
Well, first of all, we had the financial crisis that was caused by, over-exuberance and things that were actually wrong in the financial system, with securitization, subprime mortgages and so forth. Since then, we have also had scandals to do with interbank lending rates. We've had mis-selling, and now we're into maybe there has been something going on foreign exchange. So, bad news comes after bad news. And the regulatory response has been that anybody in charge of anybody else's money has to be seen to have the right levels of governance, indeed more than the right levels of governance. If you have had to have, if you say, overkill in order to create confidence. I think it is probably true that the pendulum of overkill will have swung a little bit too far, and we are already seeing that having restored a certain amount of confidence, there are certain areas we're now going to look at again, perhaps like securitization, because we've demonized all of securitization, where some of it is in fact good and we need it. So those revisions will happen, and that was probably the business of the next Parliament and the next Commission. So that will happen. In terms of growth, the original Financial Services Action Plan that was now completed 10 years ago was reckoned to have cost 0.5% of GDP. Well, anything is cheaper than another financial crisis.
So let's go over to the last question, and this is a question everybody could ask, of course, if it really changed.
I would like to know whether the next European Parliament will ask the next DG Mark Commissioner whether he or she intends to work on ending too big to fail in the financial sector.
Too big to fail. Is it still possible to talk like this? Will the next Parliament ask the Commissioner?
I'm sure that the next Parliament will be asking the Commissioner what to do, and of course there is already on the table the the structural separation. I think that there is a problem with structural separation because all of Europe's banks will have to follow the US Volcker rule that gets some of the derivatives completely out of the group. If you then impose a ring fence on top of something being completely separate, the only economic way that a bank can actually probably do that is to say this forces complete destruction of the universal banking model. And I know that there are many ministers that don't like that. So I think there is a lot to be debated and whether there are other ways in which we can do this. I mean, and I would also maybe be saying, well, you know, do we have to look at the structures where you have banks and asset managers that are interlinked?
Sharon Bowles, thanks a lot for this interview, and we wish you all the best.
Thank you.